am Dr. Amarjit Kaur. I am Professor of Accounting and Dean, Faculty of Commerce and Management at Gurugram University in Haryana, which is a public university under the Haryana State Government. I am very delighted to be present here amongst you to discuss a topic on bank reconciliation statement. The agenda for this session is we are going to discuss 4 possible scenarios, and a special attention is to how to prepare bank reconciliation statement when the credit balance of passbook is given. Friends, this is the 4th lecture in the series. This is the part 4 of how to prepare a bank reconciliation statement. If you wish to know or learn how to prepare bank reconciliation statement when debit balance of cash book is given, please watch part 1. If you want to learn how to prepare bank reconciliation statement when credit balance as per cash book is given, please watch part number 2. If you want to learn how to prepare bank reconciliation statement when debit balance as per passbook is given, please do watch the 3rd section, the 3rd lecture, the part 3. And lastly, if you wish to learn how to prepare bank reconciliation statement when credit balance of the passbook is given, then please stay with me for the next 30 minutes. I am going to help you understand this topic. Alright. So, with this small briefing, let's go to the topic now. So, friends, as I said, there are in total 4 scenarios. These scenarios have been shown, have been discussed in the previous 3 sessions as well. And we are at the last point of these scenarios, the 4th point. So, accordingly, I would be discussing how to prepare bank reconciliation statement when credit balance of the passbook is given. I am putting so much of emphasis on credit word. Believe me or not, I have seen many people committing mistake while dealing with this topic. For a small reason, they could not differentiate either this is a debit balance or credit balance. Either the balance is as per cash book or the balance given is as per passbook. Alright. Friends, cash book is actually prepared by a business. Okay. And the cash book has either the debit balance or the credit balance. Debit balance of a cash book represents an asset. Some ownership, some cash, some value which bank which is at bank, but shown by the bank column of the cash book. So, which means the business owns that cash, and that particular amount becomes the asset of the business. So, assets as per normal balance always have debit balance. So, it means debit balance of cash book represents the asset to a business, and the same way, contrary to that, the credit balance of cash book represents a liability. It means you have consumed more amount from your account, from your bank account, than what have you deposited there, and we call it as overdraft facility, or we may call it as credit balance as per cash book, not as per bank passbook, right, as per cash book. The 3rd scenario is basically when the debit balance as per passbook is. Now, passbook is prepared by bank, not by a business. Cash book is prepared by business and passbook is prepared by bank, as we all know, or the bank statement you may say, because now many banks do not issue passbook. So, even the bank statement is prepared and issued by a bank. Now, bank is a financial institution accepting your deposits, right? When you deposit, that becomes your asset with the bank, and that becomes liability of the bank, right? So, in the same cash which is there at the bank, in your books is an asset, alright, and the same bank balance at bank book is a liability, because bank is supposed to pay you back whenever you demand, or whatever the terms of the account is. Alright. So because of this logic, the debit balance of passbook is basically a a liability. As you have an overdraft facility. From bank side, it is a positive thing. So bank has given you from the bank's perspective, it is their asset, right? But your liability. And a credit balance as per passbook means bank has given you credit, like bank is showing a credit balance means this is a liability of the bank and your asset. So it's always reverse. If this is your asset, this is liability of bank. If your liability, then asset of bank. Alright, so this is a reverse thing, and this is very common sense. You can make out from your own personal, irrespective you are doing any business or you are having your personal saving account, the concept remains same. My personal passbook, as an individual, the credit balance means a positive balance, a debit balance means a negative balance, right? The same thing applies to any balance of passbook or the cash book of a business as well. Okay, so with this premise, with this clarity, let's move further to the topic and discuss how to prepare a bank reconciliation statement when credit balance as per passbook is given. Okay, so friends, we need to make adjustments to prepare a bank reconciliation statement. The adjustments which we make for the items are either we subtract the item or we add it, right? We will subtract items, if a credit balance of the passbook is given as per the discussion I have now followed. Number 1, the checks issued but not presented. The same item was actually added if the balance as per cash book is given, either debit or credit. Now, this item, that check issued but not presented, is going to be subtracted. The reason being, now we have been given the balance as per passbook, and irrespective of the debit or the credit balance as per passbook, which means in the part 3 what we discussed, the same thing is applicable in part 4 as well. Only difference would be the opening balance. The credit balance will go in a different column of the BRS, whereas the debit balance as per the passbook in section 3, in the part 3 we discussed, it goes on the minus column. This particular credit balance as per passbook will go in the positive column, in the plus column of BRS. That is a major difference. Otherwise, all the rest of the items which we discussed in part 3 to subtract or to add are going to be treated on a similar fashion here as well. Okay. So accordingly, the second item, that interest has been credited by the bank, is going to be subtracted, because you are not aware. You have to start with the passbook balance and you intend to reach out to the cash book balance by making few adjustments. Okay. So you are going to subtract the interest amount which a bank has given a credit in your passbook. The third item is that direct deposits by customers. Some customer has deposited in your account, you are not aware, your passbook is certainly showing a higher amount than your cash book, but mind you, we are reconciling the passbook balance to reach out to the cash book balance, so we have to reduce this amount from the passbook to reach out to the cash book balance, right? The next item which we subtract to prepare a cash book, to reach out to cash book balance to prepare a bank reconciliation statement, is that the interest and the dividend which was collected by the bank. You are not aware, bank has collected something on your behalf. Your actual bank balance is up. The credit amount shown is basically a positive amount. The positive amount has certain amount of interest and dividend which has caused the balance to go up as per passbook. But it is not going to match with your cash book. Why? Because you never recorded in the cash book. So which means you need to reduce this particular amount of dividend or interest from your passbook balance so that it matches, the end result matches to the cash book balance. Okay. The last item which we subtract when the credit balance of a passbook is given and we are preparing a bank reconciliation statement is that checks which are deposited in the bank but are omitted to record in the cash book. We have deposited some check in the bank and we did not remember to record in the cash book. So your cash book balance is lower by the amount. In actual, the passbook balance is up because bank has collected it, but doesn't matter. You have to reach out to the balance as per cash book. So you are going to reduce this amount by this logic only. Okay, so friends, I hope all the items which we discussed are going to be subtracted while preparing BRS as per passbook balance, credit balance are clear to you. Now I shall be discussing all those items which are going to be added when the BRS is prepared as per the credit balance of a passbook available. The first item which we add is the checks which were sent to bank for collection but are not yet credited. So we have sent certain check, any amount it could be, and bank has not collected yet, which means your passbook balance is showing a lower amount. Your cash book balance is showing a higher amount. So you are going to add this to bring it to the same level. Checks were sent to the second item, checks were sent to bank for collection but have been dishonored. So you sent something but bank did not collect it, right? So it means your passbook is showing a lower amount, your cash book is showing a higher amount. So you need to add it to bring it to the passbook. Then direct payment by bank. Bank has made certain payment directly on your behalf, which actually has caused reduction in the passbook balance. So you are going to add because your cash book balance is lower by that. So you are going to add it. Then direct interest or commission which is charged by the bank is something you are going to add back by applying the same logic that bank has charged something which you are not aware. Okay, so your cash book is having your passbook having a lower balance. So you are going to add this to the passbook balance so that it could reach equal to the cash book. Okay, so the last item is the checks which were issued but omitted to be recorded in the cash book. So what will happen? Just think about it. You have issued some check, right? And you just forgot. You omitted means you could not remember, your cashier could not remember to record it in the cash book. What will be the outcome? You have given a check to Y person. Y has presented in the bank, has claimed the money and your passbook balance has gone down. Whereas you did not record in the cash book, which means your cash book balance is up. Okay, and your passbook balance is lower. Let's say it's 10,000 amount. So what will you do? You will add this 10,000 to the bank reconciliation statement in this case, so that this amount 10,000 goes up and is equal to cash book, because certainly your cash book balance is higher by 10,000 in this example than your passbook balance. Okay, so I hope you are getting the logic behind. That's why we are adding. So people are always confused, to add or to subtract. It's just adding or subtracting few items. But if you apply a common sense and think the way I am helping you to think, it will really give you, a very clear idea. If you really start applying a logic that I have been given X balance, either cash book or the balance, and I have to reach to the Y balance, the opposite book balance, right? So friend, this was a discussion on the treatment to items. Now we will take up a small caselet to understand how to prepare bank reconciliation statement when credit balance means the positive balance as per passbook is given. The question says, from the following information supplied by Messrs. Ayan, prepare his bank reconciliation statement as on 31st March 2021. The first transaction says credit bank balance as per passbook is 25,000. So, credit balance means the positive balance is given 25,000. The second transaction says checks worth rupees 18,000 were issued, but checks worth 12,000 were yet not presented. So, it's interesting, so be very careful. In this statement, two values are given. The first value is that you issued 18,000 worth checks to different people. Checks means more than one check, right? And out of that, checks worth 12,000 were not yet presented. It means the 6,000 has been claimed from the bank account. So, bank has paid 6,000, but 12,000 is the amount which is higher in the passbook balance because the people to whom you have issued, they have not come to the bank to collect it. Whatever the reason could be, that I am not concerned about, right? So, your passbook balance, which is here the 25,000 is actually higher by 12,000, and your cash book balance is lower by that. So, accordingly, what will you do? You have to reach to the cash book balance. So, you will reduce it. So, this is how exactly we should be looking at the transaction. Okay. The third transaction given is that checks for rupees 12,200. They were sent for collection on 22nd March and have not been credited by the bank. Okay. So, 12,200 was the amount which was sent on 22nd March, and which is the date when we are preparing the BRS. If you noticed, it is 31st March 2021. Okay. So, there is a gap of almost 8-9 days. So, you have sent for collection, but bank has not, by somehow, whatever the reason could be, dishonored, signatures not matching or non-sufficient funds, any logic, but actually the bank has not given you credit, means your passbook is lower by that amount, your cash book is higher by that amount. So, accordingly, you will be adding in the balance given. Checks worth rupees 15,000 recorded in the cash book, but not sent to bank for collection. So, you recorded in the cash book, which you forgot, you did not send it to the bank. So, actually your passbook will be showing this amount lower than what your cash book is showing. So, this is not actually credited in the passbook. Okay. So, you have to brought the passbook balance to the cash book balance, right, because the passbook balance is given. So, you have to bring the passbook balance to the cash book balance. So, what will you do? So, you can think now. So, I will give you the answer why I am showing the solution to you. The fifth item is a check worth rupees 11,700 received on 31st March. It was sent to bank for collection, but was not credited in the cash book, right. So, a check rupees 11,700 was received on 31st March, and mind you, you are preparing BRS on 31st March itself. So, it means the day when you were preparing the BRS, on that day, maybe morning or a few hours earlier, you received the check and it was sent to bank and was not recorded in the cash book. You didn't remember to record in the cash book. So, you have to think what will happen to your passbook balance and what will happen to your cash book balance. Item number 6 says bank charges rupees 250 now and they are debited, and interest of 1150 has been credited in the passbook. Bank has reduced your balance by 250 because of some charge which you have not recorded, means your passbook is up by 250 and your cash book, your passbook is lower by 250. So to bring the balance of the passbook to the cash book balance, you need to add 250, right? And opposite to that, 1150 would be subtracted, because it has been added in the passbook, which you are not aware. Your cash book is lower by this amount, so you will reduce the passbook balance. Okay. So now let's learn how to prepare it, how to solve this question, how to solve this case. As we know, the title always has the name of the company, name of the firm, etc. So accordingly, we are writing bank reconciliation statement for Messrs. Ayan. Then in the next line, we put the date. Here the date is as on 31st March 2021. So the beginning balance is the most important thing. The balance was credit balance, and as I explained while explaining the case, if the credit balance as per passbook is given, it is going to be recorded in the positive side, in the plus side. So accordingly, this 25,000 has been put in the plus item. So we say credit balance as per cash book. Okay friends, now the first item, the first transaction after the balance was the checks were issued but were not presented. So we discussed that the checks were issued. So your cash book balance is lesser by 12,000. Means your passbook balance is higher by 12,000 because they are not presented. Means bank has not paid. So your passbook balance is higher by 12,000. So what I am supposed to do now? I have to bring my passbook balance to my cash book balance. I have to bring it at par with my cash book balance. Okay. So accordingly, I am going to reduce my my passbook balance by 12,000. My passbook balance is given 25,000. It should be reduced by 12,000 because the person to whom I issued has not presented it yet. So that is why this 12,000 amount has gone in the minus side, in the minus column of the BRS. Okay. So friends, the third item was that the checks were sent to bank, but the bank has not given you credit. Okay. So your passbook balance is higher by 12,200. Your passbook balance is lower by 12,200. So what should I be doing? I should be increasing my passbook balance by this amount 12,200. Alright. So because of this logic, we have added this 12,200 in the plus item in the balance given as per the my passbook. Okay. So the next item is plus item. What should be added? The checks recorded in the cash book but omitted to be recorded by the bank. So it has been omitted. So what we will be doing? We are going to add. We recorded this in the cash book. Okay. But banker has not, we did not send it to the bank. We did not, banked it. Banked means we didn't send it to bank for collection. So it is with us only. My bank amount column as per cash book is showing a higher amount by 15,000. My passbook, is showing amount 25,000 balance lower by 15,000. To bring my passbook balance equal to my cash book balance, I am supposed to add this 15,000, and that is why this has gone in the plus item. Okay. The next item is that checks were sent for collection but not recorded in the cash book. So same logic will apply that you have sent the check. So you have and bank but not recorded in the cash book. You did not record. Bank has collected, has added into your passbook. Your passbook balance is up, but your cash book balance is lower by 11,700. So you should be reducing it by 11,700. Okay. As I discussed, the bank charge should be added back because bank has charged you which you are not aware. So you should be adding back to bring the balance at par with the cash book, And same way we discussed that the interest charges, interest which has been credited by the bank, your bank balance is up. You need to reduce it from your cash balance to bring the passbook balance at par with the cash book balance. So, this 1150 has gone in the minus item. So, lastly, if you make a total of all the items which we discussed, the total of plus item is 52,450, total of minus item is 24,850. So, the balance as per cash book would be 27,600, right. So, this is the debit balance as per cash book. So, debit balance means asset, right. We started with the credit balance as per passbook, and we are reaching out to the balance as per the opposite book, the different book, the second book, right. And the second book here is the cash book. So, this is the debit balance of 27,600 as per the cash book. So, that is how we reconcile bank reconciliation statements, two different balances as per passbook and the cash book under 4 different scenarios. All different situations have been covered in 4 parts, and this particular part has talked about how to prepare BRS when the credit balance as per passbook is given. I hope I was able to do the justice to this topic. Thank you very much friends for being with me. Thanks.